Some analysis on what all of this means for our local market at the Open. Cameron Peacock joins us from IG in Melbourne now. Cameron, good to see you there. What's the IG call for the Oz Market Open?
Yeah, good morning, Bridie. Look, what a night. After our market gained 0.7% yesterday to close at 45.16, I think there was a bit of enthusiasm that had generated across Asia yesterday and had started off in early European trade, but it all went south and turned pear-shaped pretty quickly thereafter, with fiscal cliff concerns and concerns over wider Europe really getting the best of markets. We saw a big sell-off. European markets all down sort of between 1.6 and 2%, and then we saw US markets having their worst session for months, finishing at multi-month lows, with Dow Jones down more than 300 points, below 13,000, the S&P finishing below 1,400 for the first time since early August, and the Nasdaq also down about 2.2%. So, a lot of people are calling this the status quo election. We saw Obama re-elected. We saw the Republicans retain control of the House, and the Democrats remain in control of the Senate. And I think the big fear now is that these fiscal cliff negotiations are going to again be locked in a bit of a gridlock, as they have been for the last 6 to 12 months.
Is a double-dip recession likely if this fiscal cliff can't be sorted before it falls?
Look, I'd say a recession is probably a little way off. I think with the Fed and Ben Bernanke and monetary policy supportive of the economy, that's probably unlikely, but it certainly increases the chances. I think the one hope for this election was that it was going to get Washington back to work, and a lot of people had been pinning their hopes on a Republican victory, Mitt Romney winning the White House, working with a Republican House and pushing through some of these fiscal cliff negotiations. But given that we really are or have maintained the status quo from what we've had for the last 6 to 12 months, which is what Americans voted for, there is a concern that this lame duck session of Congress is going to come to no avail, and we could be here in January and February with these automatic spending cuts kicking in, and these tax cuts rolling off, and America being in a very dire situation and possibly heading back towards contraction in terms of growth.
Also, European issues in focus as well, not just Greece now, but some commentary too from the ECB, President Mario Draghi, about how the issues are spreading to Germany.
Yeah, that's right. I mean, obviously the fiscal cliff concern was dominated in the US last night, but as you rightly point out, Europe's got its own host of issues. Mario Draghi was out last night saying that the EU crisis is really starting to affect Germany. We saw German industrial production down for a second straight month. I think the European Commission came out and said they expect growth across the region to come to a grinding halt next year, and the prospects there look pretty bleak. You've got Spain still wondering whether or not to request the bailout and under what terms in which they would do so. You've got the Greek vote tonight on the first leg of their austerity vote, so that's also weighing on markets' expectations. So the outlook across Europe still looks very, very grim, and I think that realisation came to the fore last night. And then you throw in the fiscal cliff concerns and what might happen to the world's biggest economy, and that's why we saw this global sell-off last night.
Cameron, it's going to be an interesting session. Looks like a pretty weak start from what you're saying. Thank you so much for that. We'll keep an eye on it. Cameron Peacock there from IG in